I think Hims and Hers stock could 10x in value over the next decade, and that may actually underestimate the company's potential. Let's dig into why, and let's start with the company's business model. Hims and Hers is part telemedicine, part pharmacy company. They connect users with treatments and doctors, but they are really the touch point for users. That's really the valuable position that Hims and Hers has built in this market. That makes them a platform company. They've also added more supply to that business, adding compounding pharmacies to vertically integrate. They brought peptides in-house and more testing services as well. That has enabled the company to go from offering just a couple of solutions, things like hair loss and ED treatments, to dozens of potential solutions to customers. This is going from a product company to a platform company that consumers could potentially go to for a lot of their healthcare needs. The way to think about the company is aggregating demand, just the way that Netflix aggregates demand for television and movie content, and the way that Uber aggregates demand for ride sharing. Neither of those companies have to be the biggest supplier to meet customer demand, just like Hims and Hers doesn't have to be the biggest supplier to meet all of the needs for its customers' healthcare needs. It can work with partners and essentially commoditize that supply, exactly the same way that Netflix and Uber have. But let's look at the company's performance. The market cap of Hims and Hers is just $12.7 billion. That's despite a 437% run up in the past 5 years. Most of those gains have come in the past year. The performance has been driven by revenue growth, which has been a staggering 78% compound annual growth rate since 2021. And that growth rate is actually accelerating recently. In the first quarter of 2025, revenue growth was 111%. But margins have also been expanding for Hims and Hers. Operating margins were a negative 3% in 2023, and they were up to 6.5% over the past 12 months. The number of subscribers and the average order value has also increased tremendously over the past few years. There are now 2.4 million subscribers on the Hims and Hers platform. So as they expand the product lineup, they're going to be able to address more customers' need and potentially keep increasing that revenue per user. So what's the ultimate bull case for Hims and Hers? I think the story is pretty simple. Revenue growth is going to be the key for Hims and Hers. That revenue growth is over 100%. That's probably not going to continue for the next 5 to 10 years. But this is a company that could grow 30, 40, maybe even 50% in a lot of years in the future as they expand the number of solutions, they expand internationally, and they reach more customers. All of those three things are going to compound together to make this a growth machine. On top of that, revenue growth, we've seen significant margin expansion, and management has said that operating margins can expand 1 to 3% per year for the foreseeable future. If the company can reach a 15 to 20% operating margin in the next 10 years, that would make this a phenomenally profitable company when you consider just how fast revenue is growing. And on top of those two operating metrics, if Hims and Hers continues to operate the way that we have seen, I think we will see multiple expansion. Hims and Hers is trading for just 7 times revenue. And for a company that's growing this quickly, it's not unheard of for that price to sales multiple to be in excess of 20. So just multiple expansion alone could triple the value of the company. But of course, there's always a bear case with any company. Healthcare is a very competitive space, and there are ingrained players who don't want to be disrupted by a company like Hims and Hers. We've seen that with GLP-1s, where Hims and Hers was using a compounding exemption to get into the GLP-1 and weight loss business. But now that that exemption is gone, they're having to make partnerships with other suppliers, and not every supplier wants to play nice with Hims and Hers. They also don't own most of that supply. Yes, they have compounding pharmacies. They recently bought that peptide business. They can do some of their own testing, but most of their supply is going to come from traditional pharma companies and generic producers. So that creates a potential threat in the supply chain. We also don't know what regulations are going to look like. I think there's a lot of potential tailwinds behind the digitization of a lot of our healthcare records and a lot of our healthcare needs, but regulations could really be a hindrance to the company's disruption of the traditional ecosystem. And those powers, particularly in the insurance side, are very strong. So what's my prediction? I think Hims and Hers is an absolute growth machine. They have demonstrated that over the past 5 years. And that power is only growing as the number of users they have on the platform continues to grow. As you get to 5, 10 million subscribers using Hims and Hers, suddenly the power shifts from those suppliers to the aggregator like Hims and Hers. On top of that growth, you have the opportunity to expand margins, and the market multiple could be a huge tailwind for the company. That's why I think over the next decade, Hims and Hers could be a stock that 10x's or more for investors. Now, at the Motley Fool, your comments make us all smarter. So please comment with your own research and insights about hims and hers. Check out fool.com/in the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.